We all know who Warren Buffett is in the investment circles. He is the world's foremost authority when it comes to knowing where and how to properly invest your money. Plenty of people have gone on to succeed by following Buffett's footsteps and pointers when it comes to knowing where to put your money. But somehow, there's something that Warren Buffett doesn't trust. For him, not all that shines is gold. And true enough, Warren Buffett doesn't think that gold is a good investment. This may come as confusing because of how gold is seen at a trading level that was at an all-time high since 1974 just in July of 2020. So if you were trading gold and you saw a dramatic increase in gold's trading price, you could have already earned a lot from your initial investment. If that is the case, why doesn't Warren Buffett trust that shiny piece of metal that has always had a special place in human history? Hi, and welcome to Investing Few. For those who are new to our channel, please do feel free to subscribe and then hit that like button on this video. But if you're already a subscriber, we're happy to see you once again tuning in. And now let's see why Warren Buffett doesn't like gold as an investment. In a letter to Berkshire shareholders back in 2011, Warren Buffett had a pretty lengthy discussion about gold even though the trading level of the precious metal was at $1,920 per ounce at that time. Buffett said, "Gold has two significant shortcomings, being neither of much use nor procreative. True, gold has some industrial and decorative utility, but the demand for these purposes is both limited and incapable of soaking up new production. Meanwhile, if you own 1 ounce of gold for an eternity, you will still own 1 ounce at its end." In the same letter, he also said that there are 3 types of investments. Gold was in the second category of investments, which involve assets that will never produce anything. Buyers purchase these assets, according to Buffett, with the hope that someone else will pay more for them in the future. So in saying that, Warren Buffett was basically saying that gold, while it does have some value when traded for a higher price in the future, doesn't really give you a lot of anything in comparison to stocks that are not only tradable, but also produce dividends. Back in 2009, Warren Buffett also had these comments about gold. "I have no views as to where gold will be in the next 5 years. But the one thing I can tell you is it won't do anything between now and then except look at you." Buffett's comments about gold that time came in contrast to stocks like Coca-Cola and Wells Fargo, which Buffett said would be generating money, and lots of it. He explained, "It's a lot better to have a goose that keeps laying eggs than a goose that just sits there and eats insurance and storage for a few things like that." So he was basically saying that investing in profitable companies will eventually lay you eggs in the form of dividends and other forms of passive income in comparison to gold, which doesn't really do anything except look really shiny and pretty. And if you happen to find yourself in a financial ditch, you can just simply sell the goose that lays the eggs, aka your stock. For Warren Buffett, the value of an investment should be tracked back to how useful it could be. Gold might be tradable, and you might end up earning money when you trade gold, but if you leave it alone, it really amounts to nothing and isn't even useful, unlike stocks that produce passive income for you. But Buffett's comments aren't exactly applicable to silver, where he actually invested before. The reason is that silver is not only a precious metal, but is also industrially valuable and is more useful than gold, even though it isn't often seen as more valuable. Warren Buffett also had the occasion of comparing gold to land, saying, "A century from now, the 400 million acres of farmland will have produced staggering amounts of corn, wheat, cotton, and other crops, and will continue to produce that valuable bounty, whatever the currency may be. ExxonMobil will probably have delivered trillions of dollars in dividends to its owners and will also hold assets worth many more trillions. And remember, you get 16 Exxons. The 170,000 tons of gold will be unchanged in size and still incapable of producing anything. You can fondle the cube, but it will not respond." He was basically saying that by investing in land, especially on farmland, you are not only keeping the land as an asset that you can later on sell if its valuation turns out to be a lot higher than the price you paid for it, but you can also use your land to produce other sources of income as well. For example, farmland can be used to produce crops, which might end up bringing you more wealth than the land itself. But gold, on the other hand, no matter how long it sits there, will simply be gold and nothing more. For Buffett, the fact that gold is incapable of producing anything is what turns him off. Buffett has also spoken fairly extensively about his belief that people who buy gold are essentially betting on fear. He said, "What motivates most gold purchasers is their belief that the ranks of the fearful will grow. That's because those who are in support of gold are often saying that gold is a source of protection during a time of crisis. So, in that sense, they are basically saying that gold can help make them stay wealthy in case all hell breaks loose. They are basically betting on fear and on the possibility of a crisis happening instead of betting on optimism, such as when real estate and stock market investors put their money in properties and stocks, hoping that they would end up growing in value later on. Considering that we are at a time of crisis and the trading value of gold is at an all-time high since the 1970s, Buffett might be right in saying that it is only at a time of fear when gold is becoming more valuable. Gold is often described as a safe haven investment, meaning that people flock to it in times of turmoil in order to feel more secure and to balance out other areas of their portfolios. But what if we weren't in a time of turmoil? What happens to gold then? Well, for Warren Buffett, it becomes a dead investment because, again, it really doesn't produce anything. You can get dividends from stocks, milk the cow you bought, and harvest the crops on the farmland, but you can never force gold to give you something it cannot. Thanks for watching our video, and we hope that we helped shed some light on why Warren Buffett doesn't believe in the value of gold. Before you go, please do subscribe to our channel for more updates and give our video a like.